Welcome everyone to the Sigma Crypto Podcast again. It's been kind of a while since we made another episode. It's just me having a good sleep schedule, ruining everything for us. But today, uh, as usual, we have me, we have Anthony, and we have Dick with us today to talk more about how to trade cryptocurrency, what to do, what not to do. And I think today we can kind of start getting into the more technical aspects, just kind of a little bit, and then talk about something that a lot of people mistake, which is have a very mistaken view, which is market cap and its relation to price. Uh, so before we start, do you guys have anything else to add? If I forgot anything.
No, we'll be covering. Yeah, it's this is kind of going to be like a part two to our introduction from last time. So we'll be expounding a little bit on some of the things that we discussed and adding to uh, things that we think you might need to know when you're entering these markets or thinking about entering these markets. I mean, last time, just a quick recap, we covered the risk involved with these markets because they're highly volatile compared to traditional markets. We talked about some of the differences between technical analysis and fundamentals. So now that we have those things defined, we'll try to make sure to make it clear which type of investment or trading we're referring to in certain contexts so that we don't confuse anyone because we realize we have listeners that are interested in trading and some are interested just more so in just picking the right coins and knowing what to invest in. So we're not going to be shilling any coins on this podcast in particular. But we will be showing you like certain examples of what some coins are doing just to kind of give you an idea of what to look for and what to maybe expect in certain scenarios. Also, I wanted to quickly mention that we have a Discord channel, and you can see the link to that, or a Discord server, and you can find the link to that in the description. We've had quite a few people joining from the last episode, coming in and eager to learn more about how to invest or trade. So it's a nice little community there, and we have a ton of resources on trading and technical analysis. We post charts and trade setups and stuff in there. So come on in and join us, and we'll post some memes and whatnot. But yeah, it's a good little hangout crew there. So
All right.
yeah,
Yeah.
go ahead.
Uh, so I suppose we can kind of start with, for education purposes, we can kind of start looking at charts, or where do you
Sure.
think we should start?
Maybe market cap.
Okay.
Mining market cap.
Mm-hmm.
Well, so I have CoinMarketCap pulled up here. And this is so there's basically like I would say two main sites that you want to use. This is particularly for noobs who are new to this market. Everyone else you already know about CoinMarketCap. The other one is CoinGecko.com, and it'll generally show you the same thing. But I like CoinMarketCap because it shows you the circulating supply. I believe maybe CoinGecko does, but you have to add it or something. I don't remember. So this kind of shows you all the data of each coin, and it's in ordered it's ordered by market cap. Um, so you have your top 10. I mean, this goes all the way down. I mean, there's thousands of coins on here. So this is a general gives you kind of a general overview of what the markets are doing at the moment without getting into having to look at charts and all that. You can kind of just get a general overview of what each coin is doing and look them up individually. Um, but the reason I have this pulled up is I wanted to show how there is a there is a very important thing that we need to look for. again, this is more information for that kind of is for like newer investors. But one thing that I noticed a couple of years back, even just getting into the markets in 2017 towards the top, I noticed that there was a lot of these like normies that were buying coins that had no interest in crypto before, and now the market's mega bullish, and it's near the top, and all these normies are buying particular coins that if you didn't really make this connection, you'd be like, why are you buying these coins? It doesn't make sense that you're buying these coins and you're not buying Bitcoin or Ethereum, right? They would be buying like Ripple. The other one was let me see. I don't even know if it would still be on here. Like, oh, Stellar.
Okay.
So like Stellar, and then I'm just trying to remember. Like, oh yeah, like IOTA. There was
I remember seeing an old chart from 2017 Coin Market Cap. Most of those
yeah,
coins that were in top 10, they don't exist anymore.
yeah. They don't. That's right. Yeah.
You straight up cannot find them anymore.
Yeah, that's true. Um, so and then I would even throw in Doge in that category right now, and this is what I'm about to touch on is a big reason why I think normie investors are buying Dogecoin, right? Because it's a coin that has no utility, virtually no utility. It's literally a meme coin, and it's one of those things that's kind of like, how do you even value this, right? So it's basically pure meme energy. But there is an appeal to it, and I'm going to explain what it is. And this is particularly to new investors. There's an appeal to it. That new investors that don't know anything, to premise that. And so what this is basically, you notice a pattern in this, and what the pattern is that these coins happen to be quote unquote cheap, right? We would consider them cheap because you can buy 1,000 of them or whatever, a few hundred of them, with a small amount of capital, and own thousands of coins. And then the mentality, the mindset, or the false presumption about it is that, oh, I'll one day have 1,000. Like, why buy 0.000 BTC? When I could just have like 1,000 Dogecoin, and Dogecoin will one day be worth as much as Bitcoin, right? This was the pattern I saw in 2017. This is why these newbie investors were buying particularly coins that were worth a few cents, that were valued at 25 cents or something, or like generally less than $1, almost like the same idea as penny stocks, and they all had this same kind of assumption that, oh, why go for the quote unquote expensive coins when I can get the cheap coins? So just real quick, I'll kind of demonstrate what we're talking about here with market cap. One thing you want to consider, you can look at the market cap, but then what you also want to consider is that all of these coins have a different supply. That means there's a different amount of tokens that are in circulation, that are available. And then you have, obviously it varies based on if that coin is inflationary, how often how often the supply is distributed, stuff like that. Is there token burn? We won't get into that, but generally there's a supply, a current supply that you can look at that's circulating. And so what you would do is you can just look right here. I'm going to show right here. So you have Bitcoin, for example, is actually it's cut off. Let me see if I can.
18 million Bitcoin,
There we go.
around 18 million, around 19 million.
Yeah, so you can see right here. There's 18,804 BTC that are currently in circulation. I think the cap is, or the supply cap is 21 million. So
Yes.
there's still 4 million, roughly 4 million Bitcoin that'll be distributed in the coming, like, I don't know, 20 years or something. So you have basically a fixed supply of of 18 million right now, um, and and then you take the market cap, which is 39 billion, right? So there's 30. It's worth 39 billion. 18 million coins are worth 39 billion dollars, right? Now we go down to say Cardano. So now a new investor might be looking and say, "Oh, I'm just going to buy Cardano. I'm looking at this list, and what can I
Oh yeah,
afford
it's
here,
three
right?"
dollars, bro. It's
Yeah,
$3.
yeah. They're immediately passing Bitcoin because they're like 49,000. No way, too expensive. I don't have that much money. I only have a couple $100. So I'm keep scrolling. Ethereum too expensive. It's 3.8 thousand. So now I see Cardano. If the Cardano's number 3, that must mean it's a good coin and it's less than $3. So I'm going to buy 100 of those, and then that those will one day be worth $49,000 like Bitcoin, right? Actually, no, because when you look at the circulating supply, there's 32. What is that? 32 billion Cardano. There's 32 billion ADA in circulation, and I believe that that's inflationary. So that's gonna, yeah, the max supply here. It says 40. There's actually going to be 45 billion. There's coins yet to be released. So there you go, right there. I mean, that's why it's so cheap, because it has a much larger supply, and cheap in quotes, right? Because the actual market cap is 95 billion. That's not cheap at all. To
Yep.
have one of the one token of a coin that has a market cap of almost $100 billion, and there's 32 billion in circulation. That's that kind
The
of puts into,
reality, yeah,
yeah, that puts into context, is this really quote unquote cheap, or is it just that there's many of them, right? And it turns out just that there's billions of so you have that, it's less scarce than Bitcoin. That's all it is.
the
So these
reality is that it's one of the it's the third most
Yep,
expensive coin you can buy.
exactly. It's the
That's
third most
what it
expensive.
means.
Yep,
Yeah.
exactly.
It doesn't mean it's a bad investment. We're not saying it's a bad investment or a good
No.
investment or anything like that. I mean, I think it's good, but uh, it's one of the most expensive coins you can find
Yeah,
anywhere. Like that's
exactly.
the whole point about market cap, is that the price, the all like the price is just about how much do I have to pay to own exactly one of that.
Right.
Uh,
Yes.
and that one, which is the supply, that's really dependent on the circulating supply. Another example is, I believe, YFII.
Yeah, that's a great
Stable,
example. Yep.
no, sorry, Yearn Finance,
YFI.
YFI.
Yeah.
Yeah, just
So
YFI.
YFI was at one point more expensive than Bitcoin. It was
That's
like,
right.
as in like in price. I think it was like 80,000 or something like that. 90. It nearly was 6 digits.
Yep.
But look at the circulating supply of YFI. It's 36,000.
Yeah.
36,000
Yeah.
YFI tokens exist in the world. No
Yep.
wonder it's
And it's
40,000
fit.
US dollars
And
right
let me
now.
see. Actually, I think
It's
it's
nearly
fixed.
it's nearly max supply.
Yeah,
Yeah,
it
it's
is
really
actually.
close
Yeah,
to max
there's like
supply.
10 more coins to be released in the supply. So yeah.
Oh, I don't like I don't like the numbers in max supply.
Yeah. So that's basically fixed. For all intents and purposes, that's a fixed supply of 36,000 YFI tokens, and that'll be it. Um, so yeah, that's, I mean, and right now it's priced at $39,000, and it's 78. It's the 78 highest market cap. So it's like, it's
It's way cheaper than Cardano, basically.
yeah,
Like
like
think about that.
if you were to sort this list, I mean, and I can actually, let's sort it by price, right? I can show you here the most quote unquote expensive, right, assets, and it's number 3. It's price wise to own one token, it's the third most expensive, and the second is like, it's basically just a Bitcoin clone. I don't know what that is. You have like Wraps BTC and then BTCB, whatever that is. So really, it's just Bitcoin, and then YFI is the third or the second highest price wise. But really, I mean, look at the scarcity. It's 36,000. So I mean, it's not going to take much more of this to pump for it to actually surpass Bitcoin in price per, cost per token. That's all we're talking here, is cost per token. Um,
Yeah.
and
Another way
then
to look at it is the higher the market cap, um, more stable it is.
Right.
Or I should say, the less susceptible to like pump and dumps that it is. And
Yep.
so, like we were saying, it doesn't mean that it's a bad investment,
Exactly.
but
Yeah.
it also doesn't mean that if you buy, if the price is 80 cents and you buy 1,000 of them, oh, one day they're gonna, like we were saying earlier, they're not gonna be worth $40,000 like Bitcoin.
No.
And so, um,
Yeah, like something like
the,
Doge,
the
Doge will never be worth more than Bitcoin. Like it'll never
yeah,
surpass.
that'd be worth pulling up again because people see that there is no max supply for Doge.
That's
It
right.
is
Yep.
legitimately infinite.
Yeah, it is. Yeah,
Is,
that's
is
right.
the is the limit.
Right.
And so that's another reason why it's not great fundamentally. Now
Yep.
it's as some people like to say, it is great pumpamentally
Yeah.
because it's a freaking meme. And if you were holding Doge in January and you held on to it, you'd have a lot more money than you did then.
Absolutely. Yeah.
But you just can't predict that. There are some people that said hold on to some and it'll probably pump because we're in a bull market and stuff is crazy right now.
Yeah.
But
That's got no, that wouldn't necessarily have anything to do with Doge. That's just that all. I mean, you can just see that. I mean, look at this. Everything's green here, give or take a few that just got finished pumping, and they're, maybe just kind of having a slight retracement, and that's about it. But everything else is pretty much green. Nothing's down too much. So all these alts, they generally move in the same direction.
yeah,
And the difference is kind of how how far in that direction do they go.
right.
So
So if another good example is if you look at Solana. When
yeah,
I originally bought Solana, and this is a face palm moment, but I bought it at like 4 and sold it at 7. Well, it's at like 120 right now. When I bought it, it was like at uh, market cap of like rank of 60 or 50 or something like that, and I think it's in the top 10 right now. So
Yes, it is.
yeah, it is.
market,
It's number
yeah. So
8.
market cap gives you a an indication of how much upside that coin can have within the crypto sphere.
Right.
Now, the crypto market cap total right now, because we're in a bull market, is going to keep going up for a while, in my opinion. Our opinion, probably. So that means that we expect Bitcoin and Ethereum and Cardano and all these top tens will still continue to increase. But there's not the potential for the 50x that some people are looking for when they're buying these quote unquote cheaper coins.
Right.
If you want that, you have to look at a smaller market cap coin. But on the flip side, they're more risky. You could put $1,000 into it and lose half in a day. So you have to understand that with a smaller market cap, typically comes more risk.
Yep. Exactly.
And yeah, that's why you see some people talking about small market cap coins. It's because of that principle. It's because they have more upside potential,
Yep.
but they're also, they're literal who coins.
Yep.
Also, since we're talking about market cap, I think it would be nice to mention the market cap of all assets, right? Like the top assets by market cap. You have gold at 11 trillion. That's number one. You have Apple at 2.5 trillion. Bitcoin is number 9 in the world in terms of market cap. And so it's over Tesla, it's over Tencent, it's over Nvidia, it's over Visa, right? And Ethereum is actually number 19 in top market cap by assets. This kind of gives you a nice picture on the state of cryptocurrency and how they're viewed in the world today. So
Hmm.
when people kind of talk about cryptocurrencies as these like literal who like when they try to like disparage cryptocurrency as if it's um, something that doesn't matter, it's some kids playing around, whatever. That's
Yeah.
absolutely not true. I mean,
I mean, yeah.
Bitcoin and
Look at these
Ethereum.
companies that it just surpassed. I mean, look, you got Visa, J.P. Morgan, Nvidia, Alibaba, Tencent, Berkshire Hathaway, Tesla. I mean, there's not many above it. I mean, you got
There's
Facebook, Silver,
Mastercard and
Amazon,
PayPal.
yeah, Google. I mean, you have the top companies in the world above it, and that's it. The eight top companies So yeah, this is the big this is the big difference between this bull market and the previous one. The previous one, it topped out at 20,000, and it was still a meme at the top. It was still kind of like, investors weren't taking it seriously. It had like it was like, it was still kind of like, why does this thing have any value? Like it was highly speculative. And now this time around, it's like there's no it's setting a precedence now among the institutional investors that now it can't be ignored and it can't be disregarded as some kind of like speculative internet trend or something.
Yeah, that's a good point. I'm glad you guys
But it
brought
also
that up.
speaks about the possible upsides of Bitcoin and Ethereum in the future.
Yeah.
So if you remember last bull market, and I'm thinking of 2017, face melting moves were very common on Bitcoin. Today, well, we might still have face melting moves, but those face melting moves will be like 300%, which
Mm-hmm.
compared to like previous market cycles might be little less.
Yeah.
And so this kind of goes into the lengthening cycles and diminishing returns theory.
Yep.
Might be important to think about, but it also has the potential to just be one of the most significant assets, most expensive assets in the world, and just pull the rest of the cryptocurrency market with it. Another point that Anthony also touched on that I also want to kind of get into is altcoins and how they move in relation to Bitcoin price. So the way I like to think of it is if Bitcoin goes down, altcoins go down harder. If Bitcoins go up, altcoins will probably go up. Some will do it, some will don't. It kind of depends on how they look. And if Bitcoin goes sideways with low volatility, that's when altcoins mostly go crazy. That's when they do face melting moves.
Which is kind of what's
Because
happening right now.
Yeah.
yeah, yeah,
Um,
that's true.
you have. I mean, I'm just have the Bitcoin daily chart pulled up. I mean, you have it kind of just trading inside a range between about 50,400 and I don't know. I'd say like the lower part of that range, depending how you look at it, is either 46,000 or 44,000. So I mean, generally, compared to these to these other alts, that's pretty sideways. Even though it's a $6,000 difference or something. Um, and then another thing that I think this is probably a good segue because I think another thing we wanted to touch on was the Bitcoin dominance. So when you look at that, like for example, what David was just saying is how when Bitcoin goes sideways and these alts start pumping, that's kind of what's happening right now. And I mean, if you switch over to the Bitcoin dominance, this is the daily. So as we learned last time, each candle here is a daily candle. So this is a 1 day time frame for each of these candles. It's been it's been downtrending pretty severely since July, since the end of July. So for all of
Why don't you
August,
give
this
a,
has been dumping, and this
why don't you
is
give a quick explanation of what Bitcoin
yeah.
dominance is?
So Bitcoin dominance is how much
How
of
much of
the
the market cap,
right,
total market cap, is Bitcoin?
right, how much of like the market share, I guess that big, and actually it'll tell you that on Coin Market Cap on here
Yeah.
at the top of the page here, if you guys can see that all the way at the top.
As a percentage on that chart, it's as a percentage. It's
Yeah,
trading
so
at.
it's nine. It says right here, BTC dominance is 41.8%, and then it'll tell you ETH dominance. So ETH dominance is at 19%. So that, I mean, if Bitcoin dominance is going down, ETH dominance is going up. That's generally how it works, because that means, well, I mean, that's kind of
Nowadays, let's say that's kind of
nowadays,
what's
yeah,
happening
right.
nowadays.
No, yeah, and I would say probably in bull markets, just because you have the alt season and all that. So yeah, like during alt season, you're gonna see that, and that's what's happening as we speak. You have all these alts that are going up, and Bitcoin's up 2.39% in a day, and we're talking about it going sideways, and it's like on the stock market, it's performing outstanding, and it's like that's sideways. But when you look at these other
Crypto, yeah.
assets, I mean, it's like Ethereum up 21% in the last 7 days. Cardano up 14% in the last 7 days. XRP up 15%. Solana, Solana up 66% in a week. There's no other market you can find these kind of gains. So, and this is what they call alt season, right? So, you have these massive returns on these altcoins. And even if you were mostly in Bitcoin, you're doing great. You're up 5% in a week. That's still great.
Yeah.
So, but yeah, but so you look at that, and so it's like Bitcoin's up, 5% in a week, and then you go over to the dominance chart and look at it. It looks like trash. It's like it's been dumping for consistently for a week, making lower lows and lower highs, or sorry, for a month, for an entire month. So I mean, and then if we look at the monthly, it's brutal. Yeah, look at that. Yeah, the monthly looks terrible. It's like topped out, and it's just like made big head and shoulders or some kind of pattern like that. So yeah, I mean, so that that doesn't mean when we look at the Bitcoin dominance, it doesn't mean like anything's. It's a funny chart because it doesn't really mean anything is bearish except for the Bitcoin dominance. So
Yeah.
it's not necessarily bearish because you could even be one of these Bitcoin maximalists and be all in on Bitcoin, and even though the dominance is decreasing, the price of Bitcoin is slowly increasing, just not as much compared to the alts. So that's what the Bitcoin dominance That's why it's dumping, because compared to alts, it's not going as
Performing as
it's
well.
not
Yeah.
performing as well. Yeah.
Yeah.
So what you will generally see is if there's a dump, if there's a negative 5%, 6% kind of a dump, Bitcoin dominance will go up because Bitcoin generally dumps
Right.
not as harsh as altcoins do. That's kind of the risk behind altcoins is that they're a lot more volatile.
Yeah,
So
it performs better in a bear market. And that's why, none of this, we've already established, none of this is financial advice. However, if one must invest in cryptocurrencies and they were to ask, which coin should I invest in? A general rule of thumb that I mean, this is just from experience, from investing in 2017, and I didn't do this. I learned this because I didn't do this. I did the opposite. I went in heavy in alts and had a little bit of Bitcoin, and when the bear market came, I was bag holding all these terrible coins I should have never bought at high prices. And Bitcoin outperformed it by huge margins compared. I mean, a lot of the coins went to zero, like roughly to zero, and or don't exist anymore. So this is why I tell people, and I'm not going to give you like a number or anything like that, but generally I would go like, uh, and this is, let me clarify that this is for a long term hold position, right? So if someone's like, I'm not interested in trading, I just want to invest. What coins do I buy? Is personally, if you were asking me this, I would say go in majority on Bitcoin. You can figure out what that means. If whether it's 51% or 80%, that's up to you. But it depends what if you want to basically hedge. Take a hedge on the bears. You would go in heavier on Bitcoin because if there happens to be a reversal and the market goes bearish, you want to be in, and you have to hold, right? You want to be in Bitcoin and not in these alts because they're going to see severe they're going to see much more severe dumps than Bitcoin.
or you can go crazy mode and have nothing on Bitcoin.
Yeah,
which
yeah,
which I did that for a couple months.
yeah. So
And
you could probably attest to that, what that's like, because we just had, if you bought, yeah, if you bought like earlier this year before this massive 50% correction, if you bought up here, I mean, you've already kind of gotten a taste of that.
yeah,
So,
I'm looking at the Link USD chart, and this is a great example of it. It's like, man, I bought in Link at let's say $30 right before its pump because I'm such a great trader and I believe in this project. I don't sell at $50 or $52 or anything. I don't follow my plan, and boom, it's now $13,
yep,
and I've lost more than half of my value. I mean, this
yep,
is kind of just what happens if you don't have a plan. and stuff like
Yeah,
that is
exactly.
you can your amazing trades can turn into dog crap trades
Yeah,
uh, if you don't have a proper plan, basically.
yeah,
And even right now, like let's say the hypothetical guy bought at $30, you got that money back just now, so you had to wait like I don't know, since May to get
Three
that money
months.
back, kind of.
yeah. And you had to
So
sit through all of the. You had to sit through a massive sale for that went on for 3 months. You had to watch all the. So
Yeah.
I mean, and this is to clarify. This is like what David was saying. I'm assuming you didn't sell your link like when it was dumping, right? You held it
oh,
through.
I
Yeah, yeah.
held.
So he didn't lose anything because he didn't actually sell, but he had to wait. He had to basically sit out while he was bag holding his link and watch the price go. Watch basically a massive sale. 50% sale on that asset happened for 3 months basically before he saw it go back to the value he bought it at. So I mean, even if you didn't sell and it's like this is why we want to encourage like smart entries, so that it doesn't come to that where you have to kind of you you bought high and so your punishment is now you have to watch all the smart investors buy in at 50% discount from where you bought it, and you're going to be salty about that because it's like you could have just you could have just waited and been more patient waiting for the
And
correction.
that's the great thing about micropsychology too, is that I remember when I was seeing, $15, $14 link, or when people were seeing 30K Bitcoin. You know what I was seeing? I wasn't seeing people saying this is the bottom. I was seeing people saying that Bitcoin is going to go to 20K, it's going to go to 10K,
Yeah.
Yeah.
bull market is over,
Yep.
goodbye, get out while you can. That's what I was hearing from people. I was hearing that,
There's probably some
like,
new Bitcoin obituary entries.
yeah, most likely. So it's easy to say, oh, just buy the bottom, you'll be fine. When the bottom hits, you're not gonna think it's the bottom. I can guarantee you, when, for example, look at the daily chart right before, on July 22nd, which is a legendary, sorry, July 21st, which is a legendary day because it started the kind of second leg of the bull market, in my opinion. It
July
closed below
22nd, you
30K.
said?
I meant July 21st.
Yep, that
Sorry.
was pretty much the bottom, yeah.
Yeah. So when you look at July 20th, you're going to notice that it closed below 30K, which held as a very critical support. At that time, I remember hearing people, it closed below support. Now it's broke down. Now it's going to text next support, and that's 20K USD.
Yep.
And then this happens, right? So I'm just telling you, right? It's again, it's gonna be easy to say, oh, next time Bitcoin dumps, I'm gonna buy. Like, I
Yeah.
love hearing that. I
Yeah.
love hearing people
I'll
saying,
get it right
"Oh,
this time.
I'm gonna buy when it dumps." No, you're not.
Yeah.
You didn't buy when it dumped the first time. You're not gonna buy the
Exactly.
second time. You're gonna be
Yep.
like, "Oh, what if I buy and then it dumps more?" Right?
Yeah.
Because, for example, maybe let's say if you go to April 25th, right? That's when Bitcoin kind of just went crazy mode and it dumped to 47K. Made a lower low, in fact, right? It made a lower low for March 25th.
Oh
That was
gosh, I
kind of the
lost it.
signal that things were not going nice. But maybe you bought it 47K, and when it was 58K, you thought you were cool, right? And when Bitcoin was dumping really hard, when it was holding 42K, you might have thought that you were a genius buying at 42K, and it just dumps more, right?
Yeah.
And then when it's, so these things, this is an example of a falling knife. You don't catch a falling knife because it cuts through your hand.
Right.
So what you want to do is you want to be smart, you want to be patient, and you want to see when things develop. And what ended up developing afterwards was interesting. It's just a kind of this downtrend where the sellers were just getting weaker and weaker over time. That's when you ask yourself, huh, should I get in or should I just wait for more? Right? Like, do I have enough or is there something more to come?
Yep.
Yeah.
And So you
You're
don't
not
need
always
to
going to
be
have that. You're
convenience
not always
store.
going to
Yeah,
have that entry, like
yeah, and
Link, like David was talking about. Like it hit the bottom and it shot and it did a almost a 2x.
Yeah, it just slingshotted. Yeah.
Yeah. And
and
so there wasn't a double bottom.
mhm.
There's nothing like that. It just hit a bottom and then it slingshot up to a 2x from where the bottom was.
And another mistake
Yeah.
I
Look at that.
made, especially, is people kind of want to get the perfect bottom too, right? It's like, oh, I'm just gonna find a perfect bottom and buy at that time. The fact of the matter is, most people don't buy at the perfect bottom. Most people buy close at the bottom, or they sell close to the top. That's what you want to do, but that never happens. Okay, that pretty much never happens. Really few people manage to do something like that,
Yep.
and
Yeah.
you need to kind of get out of this mindset. I mean, for example, if you bought Bitcoin when it was 34K at July 11th, you weren't doing bad, right? You can see that 2 weeks later you were in profit, right? It's like you didn't that wasn't a bad move, right? It's still a good it was still a decent time to buy. And if you held on to it, look at you now. You made a more than a 50% gain, I believe.
Yeah.
If my failing math is right. So
Yeah. And I'm glad you brought that up because, that's an important thing to know is that when you exit a position, whether it's, and this is something that applies to both trading uh, and longer term investing. So whether you're holding and you have a plan to sell at a certain price or after a certain amount of time, or you're just doing swing trades or day trades or whatever, this applies. It basically, when you exit a position or enter a position, you have to give yourself some margin of error because it's an impossible like science to know where the exact bottom or top is, right? We're
mhm,
dealing with like levels and ranges, and it's all a forecast and kind of an estimate based on what data we already have, right? And so we never know what to actually expect. So you're never like if you can ingrain that in your head that you're never gonna buy, and be surprised if you do. Just consider it a blessing if you happen to buy at the exact bottom or sell at the exact top. You have to expect that the price is gonna go either say you sold, it's gonna either continue to go up and you're gonna have to watch as you could have made more gains, or if you sell, uh, it could shoot back up. So it could always I would probably your safer bet is to expect it to well this is hard to say too because then you wouldn't do it, right? If you expected it to go the opposite way, you wouldn't actually do it. You wouldn't actually make that move. But I think probably the better point is to not expect anything and don't be
Yeah.
surprised if it continues to go in the direction that or the opposite direction that you predicted after you've exited. So that way you're not surprised and you understand that you're never going to get it right exactly. You're never going to get the exact price. You want to look for ranges and stuff. So you want to sell near the top or buy near the bottom. But yeah, and also catching a falling knife, the inverse of that, right, is FOMOing in the middle of a pump when you look at the chart and it's just a green candle shooting up with no top wick, right? It's just a big massive green and you're like that's when I'm buying. That's no. That's when you should be watching your gains go up and looking for an exit, right?
exit.
Looking for a
Yeah.
place to sell. That's essentially you're watching when you see candles like that, you're watching people on a roller coaster and you're not on it and they're having a good time and you just got to watch. Like you can't get on it. It's already taken off. You can't get on. But anyway, yeah, I mean that's generally, I think if you stick to those principles, it'll at least help with your psychology and you won't be like as salty and feel compelled to jump back into the position, right? Because you could say, for example, you sell on a pump because you're like, all right, I'm good. I'm going to take some profits, and the thing just keeps going up, and you're just watching for the whole rest of the day, maybe the rest of the week, as gains continue to be made on this asset that you sold early or seemingly early, right? You already took your profits, and you're watching, and then you're tempted. If you're doing that, you're tempted to buy back in and say, oh, I was right. I
Yeah.
exited too early. I'm going to get back in so I can make more money. And then you get really, that's when your emotions have fully taken control, because you're not making a rational decision by doing that. Because you don't know where it's going to top. You don't know where it's going to top out and come back down. And Solana did that earlier this week, or Solana did that on Monday. It was like in the middle of a pump, and then that news came out about the hackathon, and it just started, it was just like, all right, we're going the other way now, and just immediately started dumping. I think it's
Yeah, most
probably
people.
okay now,
Yeah,
but yeah, yeah,
it,
it's
most
fine
people
now.
will be happy. Most people will be happy to see Solana at $100. But if you're the guy who bought at 120, you're gonna
Yeah,
just
you had to
think that
just
you're
wait.
a
Yeah,
dumbass.
yeah,
But you don't want to be the
yeah.
stupid guy. You
So
don't
I
want to.
mean,
That's
look,
that's
like
the
that's
thing
it,
about smart money and stupid
right?
money.
I mean, that's a that's seemingly a small difference, right? If you look, and it's like it topped at 130, and then it had that kind of, this was what this is an impulse move, right? So you have an impulse move based on a tweet, based on fundamentals. Basically, we think, speculation, we think that maybe, I mean, it was timed that way, but so speculatively, that's what it was an impulse move. And if you were looking for an entry on Sol, that was your opportunity there. It had this. How much? Let me see how much it went down. Let me get the. So it went. So it had a nice 20. If that's correct, that's a 21. And again, it doesn't look like much because it's from 130 to 102 in price, but that's a 21% uh, retracement that it made within 3 days. Or sorry, within one day. That was within a day. That was like within, those are 4 hour candles. So like within six, about 16 hours or something. It made this 21% retracement that you could have entered there. And look at that. It retraced right back to the SMA too. It just bounced right back off of it, kept it the SMA as support. So, if you were looking for an entry on Sol, that's when you want to look. And, obviously you might get into catching a falling knife territory, but you could just play that SMA. It's like, oh, it went 21% higher off the SMA. I'm going to wait till it retraces and confirms support off of it, and then buy down at that area, right? And then you would have been good. You could have gotten in on this, and now it's back up to 127 right now. So, I mean, that's when you look for opportunity, not when this is happening and it's green cat. For the let me see on the daily. You had on Solana, you know, 1, 2, 3, 4, 5, 6. You had almost a week of green candles. That's not, that's when you wait. That's not when you buy. You don't buy after it, posted a week straight of green candles. So
Yeah, and another, I want to use an example of like where smart money buys. Um, I think Anthony, you can pull it on the stream.
yeah,
So this is a chart of uh, I was gonna say the real name, but I'm gonna say the fake public name, the graph GRT USD. So this shows what's on left. This was before, like this was after GRT dumped from. Well, let me see the all-time high. The all-time high was like 2.9 USD. That, and it dumped down to, bottomed out to 42 cent. I mean, that's just an insane depreciation. But
yeah,
what I want to highlight, and I think in a future episode, especially, we can get into the topic of divergences and all that kind of stuff. But to give you the basic idea and what you can see in this chart is that you see a massive dump, and then over time you see price moving lower. But what you notice from the oscillators is that the downtrend is getting weaker. Downtrend getting weaker, it means that the people that are selling are not being they're not able to sell more.
Yeah, they're
This
getting
is where
exhausted.
this is where smart money gets in. Smart money notices this and they realize, wait a second, the people who are selling this are getting tired. It's a pretty nice opportunity for me to buy. That's where
Yeah,
smart money bought this asset at 0.50 cents or 0.55 or like whatever. They bought it at those prices. Really smart money, and who was also really lucky, bought it at like 0.45. Okay. And then smart money watch this go to $1, right, in the next couple of weeks. And this is something as an example. There's an example of an asset that has more upside potentially that we could talk about in the future channel. What I wanted to really illustrate here is that this is one of the many examples. Many altcoins did this, by the way. GRT is not the only one. It's just that what you want to look for, and if the trend is bearish, you want to see if the trend is getting weaker, right? And you can see that through oscillators, whether the oscillators, for example, the price makes a lower low and the oscillator makes a higher low,
yeah,
well, that's a divergence. That's, the
yep.
price acting in one way, the oscillator acting in another way. This means that the trend is getting weaker. Same goes for if it's bullish, if price makes a higher high, oscillator makes a lower high, same thing. The trend is getting weaker. That's when you want to consider, you know, okay, are we going to see price going down? So that's a kind of a very basic principle on whether the price is going to be exhausted or what's going on. And Bitcoin was printing this pattern, like Bitcoin was printing this exactly in the daily too. It was just showing clear exhaustion, and that's why smart money bought it at 30K, right? Smart They didn't buy this just because, oh, I just feel like, oh, I'm gonna touch my crystal ball, and I just feel like when I buy that 30K,
I just
I
believe,
just
bro.
guys, I just believe like they're gonna like it's like they're gonna pump it to the moon, bro. Like that's not how it works. Okay, these people don't work that way. They just
They
looked
they
at the
said
chart
they
and said,
said they were gonna pump it on the Telegram server.
"Yeah, bro." Like my friends who are like really rich and have Bugattis, Bugattis from Turkey, they told me that it's gonna just pump it this day because it's like the moon cycles. It don't work that way. Okay.
That's
Another
literally
example
a
will be
thing people
volume,
do,
by the
by the
way.
way.
Yeah.
Yeah.
Uh, Astrology stuff.
Yeah,
I've seen supposedly respectable technical analysts even do this nonsense. I mean, it's just like welcome to paganism. People believe in moon
yeah.
cycles
It's a blood
to
moon,
for
bro.
price increase now. Yeah. So like
Yeah.
we're gonna go to
And
the moon and the moon is gonna show us to the moon.
yeah, and to add to this, it's you won't get, or at least we'll strive not to, like idiot bulls or idiot bears. Like you had the retard bears um, at 30,000 for Bitcoin, predicting 20,000 or 15,000, and they're not retards because oh, just Bitcoin can't go that low. They're idiots because everything was showing that selling was getting weaker and weaker and weaker.
Yeah.
Just
Yep.
like just
And the
like the
same
Moon
goes for
Boys,
yeah. The same
just
goes
like the
for
Moon
gold.
Boys when it was at above 58K and it topped out at 65K, and you had some of these quote unquote technical analysts or some of the really big crypto influencers out there are saying, "Oh, Bitcoin next stop is 100K. It's not going to stop," and then it giga dumps on everybody. So our goal here, we're not 100%. We're not a technical analysis podcast, but we will teach that so that you can have smart entries into long-term holdings and even trading. And we'll teach that and we'll go over that. But don't fight the trend.
Yeah,
We were in a mini bear trend, a macro bull trend, May
exactly.
to July. And you had bears, you had bears that were saying, "Oh, it's the end of the bull run," and people were literally doing I remember seeing it $1 million shorts, leveraged shorts, under $30,000.
So dumb.
And so don't get caught up in being a moon boy or a bear.
Yeah, we're a bear tard.
Understand the trend we're in and act accordingly.
Right.
Don't pick a team,
Yeah.
you know,
Yeah.
Think of it
because
as like a good way to think of it is you know, would you if you were hunting, right, and you're a hunter and you're hunting for, you know, you're hunting for a bear, right? So you're a hypothetical bull hunting for a bear. Would you wait, or like would you attack when when the bear just comes out of the cage and he's been starving for months? He just comes out of the cage and he's going nuts and he's destroying everything. Is that where you're going to attack him, or are you going to wait until he's had his full, you know, he's had his meals and he's full and he's ready to go back, you know, and he's ready to go to sleep and go back into hibernation, and like he's kind of losing steam and losing energy. That's when you attack, right? So that's when, you know, in the market, when you want to start scaling into a position, when you find that there's indicators of possible seller exhaustion. The means the bears are getting tired, and they're running out of, you know, they're running out of supply to sell. So and we saw that, and you know, I'm going to pull up Bitcoin here. You know, we saw that at the bottom here. You know, it double bottomed, and you can see. I mean, you could even look at this wick here on the daily when it first. When it had that day where it was just bleeding all day, and it just, you know, was like, I'm gonna, you know, the bears were like, let's just have fun, see how far we can push this down, and they got it down to 28K. Look at that, you know, look at that wick, right? You know, the bulls pushed it back up to 31,000. So you had, you know, you had a clear that made a clear, you know, bottom, at least temporarily. You know, and then the market, you know, kind of, you know, went a lot of chop there, and then it bled out again. It was like the bears were like, all right, let's try to slowly take it down and see how far. Let's try a different strategy. We'll take it down slowly, and, you know, and then tested the same level, and that's where we are. You know, that's what kind of sparked where we are now. Like, look at, I mean, then that, you know, that led to, you know, what, like 10 days in a row of green candles. You know, big, massive, like, you know, 30-40% price appreciation from there. So that, you know, that was a clear and then you can look at the on the MACD here. This is a momentum indicator. So you can see that it was like, it wasn't, you know, even though it was selling off, the momentum wasn't really, they weren't able to gain enough momentum to keep it going. So that's an indicator that the bears were getting exhausted. The sellers were getting exhausted, and there was not enough supply to sell off, because they had already established that, no, we're not going to, you know, we're not going to let go of our coins below 28K. So that caused like a supply shortage, and, you know, that's how the price appreciated from there. You know, one of the things that made it do that, but yeah, that's the idea.
Another one will probably be all the shorts that they put in and they couldn't get out of it and they got
That too, yeah.
liquidated.
The fact that you had like retard bears that were, you know, doing multi-million-dollar shorts at 30K, yeah, that'll do it. So yeah, you had a short squeeze there. I mean, that's what this big
Yeah.
green candle is there. It's a short squeeze. So
Yeah, and shorts kind of have like shorts and longs, which is about margin trading, is kind of a double-edged sword in a sense. I mean, if you have a lot of shorting pressure on an asset, that really pushes the price down. There's a lot of assets that have been manipulated this way. Same goes for longs. You can put a lot of longs, and that kind of manipulates the price that way. But once there's strength that counteracts that pressure, you really lose a lot. Like
yep,
it's just that's what happened with GameStop, right? That's what happened with AMC, is that all people realized all of the shorts that were put in place, and so they just caused a supply shock, and it just jumped the price up. That's kind of the principle in a short manner
yeah.
of speaking.
All right, yeah. Well, that's it's a good amount of information there. Do you guys have any, as we kind of close out here, any like closing thoughts? I know we covered like, kind of, again, it was more of like a part two of what we discussed last time. I
Hmm.
think what we're gonna do for the future, as we have more, um, as we get more comments, also feel, if you're viewing, like, please feel free to, comment any questions or whatever that you might have. Um, and also, if you join the Discord, feel free to ask any questions in there as well. But I think what we're gonna do maybe towards the end of our future episodes is we'll start to answer questions or like read comments or something like that.
Hmm.
So yeah, feedback is
That's a good idea.
also welcomed because this is a brand new podcast and we're still kind of uh, getting our footing and stuff like that. So please also feel free to offer any feedback, critiques, compliments, whatever.
And I have one more thing to say. It's very important. I have at this moment panic sold everything I have because the price moved negative 0.50% downwards. So I'm sorry, guys.
Wrecked.
This is not for me. Oh no.
He's seething.
Yeah,
Yeah,
yeah.
suicidal
I,
Wojak.
I know a lot of people, myself included, like when they see even some smart, like small downwards movements,
Yeah.
it's like they just get panicked, right? It's like,
Yeah. Oh, it's not going up forever. Yeah, because people. I mean, we
oh,
said
it's
this
just
last time. Is like, yeah,
50K.
people literally expect once they buy, like, oh, I bought, so it's gonna just go up from here. Like, just because I bought, the action of me buying is gonna make it go up. So they like it goes down like 0.3%, and they're seething because they think it's supposed to just go up like immediately. So yeah, that was a good. I think that was a good tip though that we kind of touched on is like, again, look for ranges, right? Don't You're never gonna find the exact bottom or the exact top. So we want to find these like crucial, like these critical ranges to base our decisions on, amongst other things, obviously. But that would be one of them is to like just develop that mindset of that mentality of like, I'm gonna probably sell here and it'll keep it might go back up uh, and prove me wrong, and that'll be okay. Or I might sell early and it'll keep going up, or I might buy and the price keeps going down. So there's multiple variables that could possibly happen after you click that buy or sell button, and
Yeah.
you can't really expect any. You should have no expectations, right?
Yeah.
That's one of the principles of being a trader is like the market owes you nothing, and don't, have no expectations, and every moment in the market is unique. So if you can ingrain those principles in you, you'll be off to a good start. This stuff took me, costed me a lot of money to learn, a lot of losses and years of errors and fails to even just figure out those pieces of information. So
Yeah.
wish you
And
guys the
last
best, and yeah, if you guys have any
one
closing
more quick
thoughts.
thing.
Yeah.
Yeah, one more quick thing. Just understand if you're going in a leverage trade, you want your dots, you want your T's crossed and your I's dotted. So you want to have a very firm stop loss. Okay. Now, typically you can scale into that, but typically it's not scaling in over a longer period of time. And when we're talking about a longer term position, say you want to buy some whatever asset for the duration of the bull market or what you think the bull market might be, it's a good idea to scale in over a period of days or maybe a period of weeks, with the knowledge that we've already given you entries into a good entries into the asset. So just keep that in mind.
Yeah.
Um, there's a difference between going to a short-term trade, swing trade, and there's a difference, and that is different than going into a longer-term holding position. So
Definitely.
something to keep in mind.
Yeah, and it all obviously, all depends how much, how much capital you're working with. So, if you're making like smaller investments and buys, then, you say you have like, 100, $200 or whatever, You can obviously do the dollar cost averaging, where you're spreading out your order so that you cover different prices in case there's you know a more of a volatile fluctuation. But like with a smaller amount, it's like it's such a small amount that it's like even a a big move either way, it's not going to be as as detrimental to you. If if you happen to lose, if it happens to go 5 to 10% in the opposite direction. So yeah, it all depends on these things you'll figure out, and we'll teach more on as we go.
Yeah.
But yeah, it all there's so many variables in this stuff. That's why all these people say, "Oh, this is not financial advice," because everyone's working with a different amount of money and they're looking at different like time frames to invest in, and they have different goals, and so there's a million variables, and that's why you really can't offer like advice that applies across the board to everyone. That at least in terms of like how much should I invest, what should I invest in, that kind of stuff.
And different risk tolerances.
Right.
Yeah.
Exactly. Yeah.
And we haven't said it. I don't think we've said it yet, but we probably shouldn't need to say it. But I think it actually does need to be said. Don't invest money you don't have.
Yeah.
Don't invest next month's rent. Don't invest your family's food budget.
Or your 401k.
Yeah. Well, you could do that, but
You can. You actually can do that, but
you actually can't
Yeah.
do that. And if you're young enough, in my opinion, not financial advice, crypto is a good place for your 401k because if you're young enough, you can tolerate more risk, and there's a lot of upside here.
yeah, it's
So,
true.
But anyway, I just wanted to get that out. Anything can become addicting. Don't let crypto become a degenerate addiction to you, where you're losing all of your family's money or your own money.
Yep. Good advice. Yeah. You got anything else, David?
Um, yeah, on that topic, on the topic of very important and good financial advice, I would like to announce that I've sold my entire house and I've taken
Wow.
thousands of dollars of loans to
Just
buy more
just now.
Bitcoin.
Just
Yeah,
as Dick was
just
talking,
just
that you
right
did all
now.
that.
Yes,
Yeah.
yeah, just right now,
You did the
because
Michael Saylor strategy of
yeah.
taking out a loan to
Just
buy Bitcoin.
yeah.
Well, well, you know what they say. You never want to be the micro strategy. You always want to be macro strategy. So I'm gonna sell my car. I'm gonna sell
Yeah,
my
just
wife.
liquidate
I'm gonna sell my
everything. Yeah.
everything. I'm obviously joking. Don't sue me. Uh, yeah, definitely. Yeah, definitely. And don't forget, unrealized losses are not losses.
Yep.
Unrealized profits are also not profits. So once you kind of have
Yeah.
that idea, it's very important. It's easy to say, "Oh, I made times three profit, but I didn't sell anything." Then you're not in profit. You have a nice potential, but you're not in profit. It's also a
Exactly.
good thing to think about.
Yep. You have to actually do something. You can watch the numbers go up or down, but until you act upon them, nothing's happened. Um,
Yeah.
all right, great. Well, those are good closing thoughts. Thanks, guys. Again, I'm gonna do the cringe YouTuber thing, but make sure you like and subscribe if you haven't already, and I don't know, the notification bell thingy if you're into that kind of thing. I guess we're trying to do this like once a week, and hopefully improve as we go. So, again, join the Discord, leave comments, and give us some feedback. We appreciate it, and that's all. God bless, and don't get wrecked.
Don't get wrecked. We'll see you all next time.